So, good morning, friends. I couldn't see any chat, so at least if some of you can switch on the video for at least 1 minute, few seconds. Hello, can you hear me? Okay, fine. Audio, video clear? I could see the chat now. Okay. Okay, admin ku na போகணும். Fine. So, my dear friends, hope you all prepared very well, gearing for tomorrow's exam. So, welcome to this last minute revision. In fact, should have been planned few days ago, but unfortunately held up in some CA final classes, so couldn't handle that. Normally, traditionally, we used to have this last minute revision class a day before the examination. So tomorrow we are having the exam. Anyway, so we don't have much time for the introduction. So we will have few approaches towards the examination towards the end. So primarily it is intended for some revision parts. So as we have discussed in our classroom, our syllabus we identify into 8 different chapters. So even though study module consists of only 5 chapters, we identify that as financial statement of companies, cash flow statement, investment accounts, so through which we cover the AS3, AS13, and then we have buyback. Financial statement of companies and buyback are purely regulated by Companies Act provisions. Then we have amalgamation, we have reconstruction, then we have consolidated financial statements, through which we cover AS 21, 23 and 27. In amalgamation we cover AS 14, and then we finally have branch accounts. Even though branch accounts is an independent chapter, because of one area called foreign branch, we link AS 11 discussion along with the branch accounts chapter through foreign branch. Like that, 7 standards will be covered. Out of the total 27 standards issued, 7 standards we are covering through these chapters, because having more significance in the marks, so that way we identify these as separate chapters. Then 20 other independent standards, so plus 20 independent accounting standards, plus introduction to accounting standard, miscellaneous topics 2 in numbers, introduction to accounting standard, and framework. So this is our syllabus. Okay. பயமுறுத்துறதுக்குள்ள, it's not making you fear about the syllabus and all. This is our syllabus. My dear friends, in the examination, for the examination, when you are gearing up, just forget about what you have done so far and all. So no regrets and all. Now you should gear up with whatever you have done. So you have attended classes, and accounting you have attended 250 to 300 hours of session. That itself is a very good preparation time only. And then you have spent a lot of other time in revision, etc. So sir, many things I am forgetting, etc. All these things, no, forget it. In the examination, when you read the question, answers will come. When you write on your own, then you will feel that you are getting the answer, because you have listened to some discussions previously, and that will unwind and will give you answer. We might think that we are inventing the answer. So with so much of underconfidence, don't invent. Invent it with so much of confidence, because the answers are coming out based on what you already learned only. It is not that invention happening in the examination hall. That is for sure. So have strong confidence when you write every question, every answer on your own. Don't try to now recall from class number 50 or page number 40. All these things now will create a lot of undue stress. Read the question independently. Try that answer to be answered from your brain on your own. it will give you answer based on what you learned only. Anyway, coming back to this. Normally, last minute revision, last minute classes and all, people expect like, sir will give some important questions and that will come in the exam and all. Absolutely, I don't believe in such things, but I believe always in the analysis, my dear friends. As a student, if I am a student writing examination, the inter exam tomorrow, then I will naturally go with the analysis. Analysis is very simple, easiest, like the common sense approach only, that whatever standards that had come in the previous exam will have less significance. I won't tell it won't come under less significance from the coming examination. It's an open record, so it's an open session only. Anybody can hear this. So whatever standard that had come in the previous exam will not have much significance, or whatever standard that did not appear in the previous exam will have more significance. That's all. So it is all about more significance and less significance. It is not about like, these are the standards. Institute has a rule, by right should ask only these questions. Nothing like that. Any question can be asked, my dear friends. So from that analysis, I could see in the previous examination questions based for the coming exam, from my viewpoint, what is more significant. So right from starting with AS1, AS2, AS2 inventories, for the last two exams we didn't had question, but if you see the so many question papers, almost in every exam we used to get question from AS2. The last two exams we did not have question from AS2, but highly anticipated. So then again for the last two examination we did not have question from AS4 and 5, so highly anticipated. So other standards which had already come, I would say tier 2 importance and tier 1 importance. So AS7, AS9, these two standards had its presence in the previous exam, including AS10. So we will take the next standard 12. 13 had its presence in the previous exam, so thereby we are just aiming for the September 25 examination. So then 15. So again I can put this into 15 because 15 had come not in the previous one but in the January examination. So then we had 16. Another such standard, so very significant, is 17. 17, for the last few examinations its presence. So then we can expect question from the segment of like 19, 20. There are 19, 20 and 22. These questions 19, 20, 22 had in Jan but not in May. But AS 1, 2, 4, 5, 17 was not there in Jan exam as well as May exam. So I would say it is highly important. Then after 21, 23, 27 is consolidated financial statement, always important. Amalgamation, always important. AS3 cash flow statement, investment accounts, always important because they are chapters, and all these 8 chapters every time will have its presence. So always will have presence. It is not alternative significance and all. So then other standards like AS 25 came in the previous exam for 7 marks. So we don't expect much question from AS 25, 26 and all. But there could be a question from impairment, my dear friends. AS 28 impairment and provision, contingent asset, contingent liability, etc. So these standards highly significant. Doesn't mean that other questions should not come and all. In the MCQ session, normally questions that can be tested is PPE, linking with government grant, linking with the impairment, etc. and all. This is just for a basic thing that today or tomorrow you give maximum priority to what standards, etc. From a chapters analysis, I see that last 2 examination, I don't find branch having a very huge presence in the examination question paper. So branch accounts, either it could be a stock and data system problem with a 14 mark or 10 marks at least, or it could be a foreign branch problem. So a stock and data system problem, or it could be a foreign branch problem. So expected, because the last 2 exams we had question for 6 marks. So higher marks is expected from branch account chapter. Then another topic which I feel is that internal reconstruction. I could see the trend as alternative examination is coming. Such trend need not be followed and all. So I am not creating any false security here. So but just an analysis. Always we go by statistics and all. So internal reconstruction. is also anticipated because it was not there in the previous exam, but it was there in Jan exam. So like that, we are just having a simple analysis. Consolidated SOPL came previously, so thereby consolidated balance sheet is expected. Consolidated balance sheet with simple adjustments. Just that revaluation effect alone, you should be looking into the revaluation effect of assets in the consolidated balance sheet. This is just for basic inputs only, my dear friends. Revision we will start. When we do revision, I don't want to fast and cover. We do what do we say, simple manner we will teach, in the sense, no, as if you have not done much preparation. In that manner only I would like to go about. So we are starting with AS1, disclosure of accounting policy. Disclosure of accounting policy. Under this standard, my dear friends, the standard states significant accounting policies applied in the preparation and presentation of financial statements should be disclosed. So I could see in the MTP as well as the RTP testing, I don't know whether the latest RTP or latest MTP. So there was a problem based on this AS1. So materiality level was given as a reason for non-disclosing a particular policy. So materiality level, yes, correct, because only significant accounting policy should be disclosed. If it is not having material effect, it need not be disclosed, but the materiality should be established with concrete evidence, quantified information. It is not that merely stating immaterial and thereby we are not disclosing. Like that you can't establish. So here the management, if they want to say that it is not material and thereby they don't want to disclose accounting policy, there should be concrete evidence. So latest RTP or the MTP has this question. So your source for the next today and for tomorrow's morning preparation has to be, my dear friends, the last two RTPs, the last two MTPs, which means 4 MTPs will be there, 2 examination, 4 MTP and 2 suggested answer should be minimum preparation based. So don't go by now henceforth chapter wise and all. Do this and you go to exam. Definitely you will face the exam with high confidence and you will get extraordinary marks. Coming back to this, about accounting policy, significant accounting policy should be disclosed. Similarly, my dear friends, it should establish true and fair view. The accounting policy selected should establish true and fair view. Other consideration, yes, we convey materiality, substance over form, and prudence. What are these things there? These are the factors which can be used for selection of accounting policy. Then as far as disclosure of accounting policy is concerned, we identify accounting policy into fundamental accounting assumption, others, you know, GCA, going concern, consistency accrual. If followed, you need not disclose it. If it is not followed, the fact it is not followed should be disclosed. Other policy, whatever has been applied should be disclosed, whatever not applied need not be disclosed. No much time for AS1. Remember these points and based on that, no number based questions and all, definitely you can answer any question from AS1. Change in accounting policy, if it is significant material, it has to be disclosed. Like that we are understanding. The effect also should be disclosed. Read with AS1 with AS5. So AS5 is highly important from this examination perspective. So this is AS1. Going to AS2. Valuation. In the speed we will take AS1, nothing to be discussed. Regular class we took only 20-30 minutes time. So here valuation of inventories, my dear friends, very very important. So you know inventories consist of raw material, work in progress, finished goods, consumable, stores and various spares. If not qualified to be PPE, then these are all inventories. Valued at what? Lower of cost and NRV. Lower of cost and NRV. For all the goods, we should apply the principle of cost or NRV, whichever is lower. So the cost, my dear friends, we understand purchase price. Then we have conversion cost, some other cost, other cost. இதுதான் primary components of cost price. What is cost price? List price or quoted price minus trade discount. That includes even volume discount. Trade discount means we buy the goods now based on the level quantum of goods we purchase, they are offering some discount. So it could be value based, it could be quantum based, or at the time of purchase some negotiation made, some discount is offered. All such discounts should be deducted. We should not be deducting cash discount. We should not be deducting cash discount. Remember all these points. So next, non-refundable duties and taxes. Non-refundable. This is how here. Voice is not audible. Hello, just give an acknowledgement. No voice. Hello, hello, hello. Now it's okay. Hello, 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 hello. Voice is breaking in between. Okay. Now the continuous when I speak, maybe it is breaking. Purchase price equal to list price minus trade discount plus non-refundable duties and taxes plus directly attributable expenses such as the transportation. All these costs should be considered, my dear friends, is what we understand as purchase price. So when we say cost means this purchase price is something normally applicable for raw materials if it is a manufacturing company. But if it is a trading company, the company which buys and sells goods, then it is relating to stock in trade. So for the appropriate thing you should consider. This is a common definition of cost for all types of materials, all types of inventories. Next, the conversion cost consists of, is it clear? Conversion cost consists of, my dear friends, it is labor and overheads, variable overheads, fixed overheads. Other cost means some specific designing cost or such other any other professional fees paid is what we normally understand as production. Thereby it can be directly attributable to number of units in hand. But fixed overheads alone, it is allocated to the closing stock or allocated to the cost of production on a particular basis. So we have discussed so many things. So finally what we are understanding is that it is normal production or actual production, whichever is higher, is the basis of allocating fixed to overheads. Just to quote that simple understanding. Sir, I want to at least inventories, I want to complete it through this revision class. Okay, so we purchase 5,000 units of raw material. 5,000 units of raw material. It is 6 lakhs. Quoted price. Quoted price வந்து 6 lakhs. Trade discount offered at 5%. Trade discount offered at 5%. GST paid can be availed as input. So 5,000 units of raw material. So quoted price it is 6 lakhs. Trade discount is at 5%. GST paid. The quoted price, my dear friend, 6 lakh, trade discount. GST, this is excluding GST. Aduvum mention pandra, excluding GST. GST paid can be availed as input, which is given in the problem as say 1 lakh. Next, transportation cost. Transportation cost, it is 2 lakhs. Transportation cost 2 lakhs. So 5,000 units of raw material. Now my dear friends, raw material consumed, it is 4,000 units. Raw material consumed in production, it is 4,000 units. Okay, raw material consumed in production. Labor cost, still no voice. Kekda? Labor cost, my dear friends, is 3 lakhs. Variable overheads, say it is 1,80,000. Then we have fixed overheads, say to the extent of 4 lakhs. Fixed overheads to the extent of 4 lakhs. Now, normal production is, my dear friends, normal production is 3,600 units. Normal production is 3,600 units. So, like this information given under finished goods sold is 3,200 units. Finished goods sold 3,200 units. So, if the question is compute the value of inventory, then what will be the answer? So, first of all, from a raw material perspective, 6 lakhs is the quoted price excluding GST. GST can be availed as input by the refundable tax. So, thereby it need not be considered. If it is already included, it should be deducted. Number 1. Similarly, if the input can't be availed, then GST should be added. Then trade discount 5% should be deducted. So, it is 30,000. So, thereby it is material, it is purchase price 6 lakhs minus trade discount 30,000, GST not to be considered, transportation cost 2 lakhs. So, thereby it is 7,70,000. 7,70,000 is the material cost attributable to 5,000 units. Sorry. Now, what is the closing stock of material? Closing stock of material is 1,000 units. So, thereby what is the value? 7,70,000 divided by 5,000 into 1,000. So, 1/5 of 7,70,000. Can you calculate if you have calculated nearby you? So, this is the closing stock of material. The question was asking complete the value of inventory. You have value of inventory as well as value of finished goods. So, you understand 5,000 units purchased, 4,000 units consumed, 1,000 units we have, 1,000 units on a value we have computed, my dear friend. So, 1,000 units on a value is 7,70,000 by 5,000 into 1,000. Similarly, my dear friends, how to find out closing stock of finished goods? Closing stock of finished goods, my dear friends, very simple. So, first of all, material cost, labor cost, then we have variable overhead, then we should also have fixed overhead. The production in relation to 4,000 units, thereby 7,70,000 divided by 5,000 into 4,000 will be the material cost. If any of you can calculate and put it in the chat box, it will be very good. So, 7,70,000 divided by 5,000, the 4,000 will be material cost. Labor cost, variable overheads are not directly given. Is how much abhina? You understand, it is 3 lakhs, 1,80,000. 3 lakhs, 1,80,000. And as far as material cost is concerned, it is, thank you, Harshida, 6,16,000, 6,16,000. And fixed overhead allocation. Allocation is based on 3,600 units or based on 4,000 units. If you can answer, it is based on 3600 units or 4000 units allocation should happen. So here we understand it should be based on 4000 units, divided by 4000 into the 4000, because that is the production, my dear friends. So thereby we understand the entire fixed overheads will be considered as production cost, so which is 4 lakhs. Suppose the normal production was 4500 units na, then this amount will be different. 4 lakhs are there, 4 lakhs na. Okay, this amount will be different. Suppose it is 4500 normal production na, then we would have allocated based on 4500 units. So how it will be done? It is 4 lakhs divided by 4000 into 4000 is what we would have done. Hope you are following. Acknowledgement kodunga, because we don't have time to solve many problems, so that way you're understanding that all of you. Okay, so now the total value will be arrived. This is the cost relating to 4000 units. So already sold 3200 sold. So you can easily find out what is the closing value of 800. So this amount divided by 4000 into 800 will give you the closing stock of inventories, closing stock of finished goods. Then suppose selling price given, then NRV will be compared and take whichever is lower. Selling price given na, then if selling expenses also given, selling price minus selling expense will give you NRV, cost or NRV, whichever is lower, comparison should be made. RTP la question has given based on the joint product, my dear friends. Appo you should take total cost will be apportioned to various joint product in the proportion of sales value at split off point. Sales price per unit illa, sales value. Suppose joint product 1 600 units, selling price 20. This will be 800 units, selling price it could be 30 na. Then 600 into 20, 6000, 12,000, and here 24,000, 1:2. Selling price is 20:30 is 2:3. So you should not take selling price per unit, sales value. And when you take this total cost, material cost, labor cost, overhead cost should be added. You should deduct the NRV of byproduct, NRV of scrap. That is based on RTP one question is there. Appo one problem from the joint product, byproduct, joint product byproduct cost allocation. The other one is this is the comprehensive problem. So inventory very important. Also remember, my dear friends, from a raw materials perspective, here also we should value your cost or NRV, whichever is lower. First NRV normally means what? Sale price minus selling expenses. We also have cost of completion. WIP na sale price minus selling expense minus cost of completion. But for raw material, NRV is nothing but replacement cost. There is something called replacement cost. So normally if I sell, how much I will get is NRV, but for raw material, if I buy again, how much I have to pay is NRV. Seri, that's okay. Above cost 100, replacement cost 90 na, technically will take whichever is lower. No. So the standard says that if the finished goods NRV is equal to or greater than cost price of finished goods, then there is no need for valuing raw material at NRV. It is always valued at cost. In classroom, what we conveyed on the rule, let me tell you, raw material always valued at cost. Always valued at cost. Only in one circumstance, raw material will be valued at NRV. Two conditions together satisfied. What are two conditions? NRV of finished goods is less than cost price of finished goods, and NRV of raw material is less than cost price of raw material. In this two conditions together satisfied nada, we will value raw material at NRV. Otherwise, always raw material will be valued at cost price. Like that we understood, my dear friends. That's third problem area you take it. Okay. So the comprehensive problem, connecting raw material, variable overhead, production overheads, allocating fixed overheads, allocating fixed over problem area, joint product by product, significant examination area. So then third is the raw material related valuation, my dear friends. So like that 3 major problem area, please inventories spend around another 45 minutes or 1 hour at your place to solve various examination questions, past exam institute resources question for inventories, my dear friends. All of you following? Can I proceed? Or chat or acknowledgement, please give. Though it's not a right time to discuss AS3 and all, you understand, my dear friends, classifying operating activity, investing activity, financing activity, cash receipts, cash payments, classifying into these 3 activities. So principal revenue generating activity, incidental activity, we call it as operating. Too much introduction class. Purchase of goods related, sale of goods, and the incidental activities, various other expenses. This is we understand as operating cash flows. Investing cash flow, purchase of asset, sale of asset. Then interest received, dividend received, rent received, all these things are investing cash flow. Financing cash flow, my dear friends. So shares issued, shares repaid, loans taken, loans repaid, interest paid, dividend paid. Like that we understood, my dear friend. Sometimes a 5 mark question onto classification will come. So remember about loans that we discussed there, that loans given to subsidiary company, investing activity, loans taken from subsidiary activity, financing activity only. Upon interest relating to such loans will be based on the nature of the loan. If the loan is investing, interest is investing. Loan is financing, interest also financing. Loans given to employees that was taken as operating cash flow. Interest relating to such loans, employee loan, not be considered as operating cash flow. We have 2 methods, direct method, indirect method. So this is not the time to solve the problem. Indirect method. When you take actual receipts, actual payments, actual receipts, actual payments. Maybe when I'm moving much, no, the voice is breaking. I think I have to be statue here. Because of actions when I do not some triggering. Is it okay now, the voice? Some noise is coming. Okay. Hello, hello, hello. External noise, huh? So in direct method, actual receipts, actual payment should be taken. Under indirect method, we will take with the okay, thank you. So we will take the cash flow from operating activity with the help of profit. So we will arrive through PBT, my dear friends. Question gives you retained earnings, opening balance, closing balance means the difference is nothing but current year retained profit. So you will adjust to what and all na dividend, reserves and taxation to make it PBT. Then only you should make various adjustments like non-cash and non-operating items elimination, then working capital adjustment, then you will arrive at the tax cash flow, then extraordinary cash flow. Indirect method, we need to start with PBT. But if the question already giving PBT, no problem. If it is not given, then you may have to adjust for dividend, reserves and the taxation to make it PBT. Then non-cash, non-operating like interest paid, interest received, profit on sale of asset, loss on sale of asset, depreciation, such item will be adjusted. Then working capital adjustment, increase in current asset, we discussed logic and all. We told you very clearly, increase in current asset is not actually outflow, but we will make you remember as outflow to make the correct plus and minus. Increase in current asset, so stock increase, money goes out, so outflow. Decrease in current asset, stock goes out, money comes in. Like that we remember, but that is not the real logic. So like that we told, experienced it. So please solve at least 1 or 2 questions from the cash flow statement. My other key part, what is that now? For me, AS2 for this examination, next most important standard is AS4. Contingency and events occurring after the balance sheet date. Contingency and events occurring after the balance sheet date. Okay. What is contingency in a state of situation or condition? The outcome will be known or determined only on the occurrence or non-occurrence of an uncertain future event. Adala okay. Or some situation that might occur or may not occur situation we understand as contingency. And events occurring after the balance sheet date. So what we want to understand as events occurring after the balance sheet date means it is whether adjusting event or non-adjusting event. Whether it is adjusting event or non-adjusting event is what. Okay. So balance sheet will have a date. Balance sheet will have a date. Say it is normally titled 31st March here, and this financial statement I have told you it is not getting finalized or prepared on 31st March. It is just titled as 31st March, but it is finalized on some other date and getting signed, which we call it as approval date. Approval of financial statement generally for companies by board of it is 31st May. So between these two dates, certain things happens in business which affects the balance sheet. So, should we make adjustment to such a balance sheet? P&L, etc. is the question that we understand that if it is adjusting event or not adjusting event. If the standard gives permission to make adjustment, we call it adjusting event. If the standard says you should not make adjustment, it is not adjusting event. If it is not adjusting event, what you will do? You will make disclosure. Where will you make disclosure? Let me give you a pass. Let me see whether you remember. We may have to make disclosure if it is non-adjusting event. Something happened after the balance sheet date prior to the approval. Standard says you should not adjust. Above we will make disclosure for that. It is not simply ignored. We will make disclosure. Where will you disclose? So, such disclosure not to be made in the notes. It should be made in the report of approving authority. Board's report. Thank you so much. The notes the report of approving authority. Please 2 marks so they can test in the MCQ, my dear friends. Okay. Adjusting event means what? It is situation or condition existed on balance sheet date. Then some event occurred that confirm that situation, that provides further evidence of the situation existed on balance sheet date. We call it as adjusting event. So, when we say in this order, condition or situation existed on balance sheet date, subsequently confirmed, you should not be always seeing that order. Vehicles and gas. Okay. So, we should not be seeing such things in the same order. Why, sir? Because sometimes only when the event occurs, we will check whether the condition was there on balance sheet date or not. So then if we know, based on this event, when I check, was the condition existed on balance sheet date? Now I know, yes, the condition was there now, then naturally should be considered as adjusting event. Why we are explaining this? Because many times we may not be aware of this condition on this date, but later on event occurs. At that time when we check, we know the condition existed, then it will be considered as adjusting event. So, adukku examples. So, my dear friends, in our customer's place, there was fire accident on 29th March, which we were not aware of. 10th April, he became insolvent. Insolvency gives to bad debts. Can we adjust the bad debts? Appo, you should not tell, sir, I was not aware of this fire accident. Like that you should not tell. In the event insolvency giving a rise to bad debts is the event which is because of the fire accident happened prior to the balance sheet date. even though you were not aware of this, it is a situation existed on balance sheet date. Same thing I explained for discovery of rocky surface, land purchased there in February 2025. Rocky surface in the land discovered in say April. So what happened now? Sir, we were not aware of the rocky surface, so thereby no situation on balance sheet date you can't tell. Now when you discover the rocky surface in April, now can you relate the loss to the balance sheet date, whether the rocks were there in the balance sheet date? Yes, the rocks were there on the balance sheet date at the time of purchase of land itself, thereby he told you it is adjusting event. Same principle only we applied. February some fraud error happened and April such fraud is discovered. The fraud transaction we were not aware of in February or March. April discovered, but April when it is discovered, we know it is relating to February. It is relating to February. So we should understand balance sheet date where situation condition was there. Even though order wise situation existed, subsequently confirmed. Practically, once the confirmation happens, check whether the situation was there on balance sheet date or not. So for another example for non-adjusting events, so we were quoting several examples for adjusting events, theft, errors, the discovery of these losses, all these things are the adjusting events example, my dear friends. Sorry. Non-adjusting event now, see in our customer's place there was a fire accident on 2nd April. 10th April he became insolvent. Insolvency we are checking, giving a rise to bad debts loss. After we are checking whether the bad debts loss was there on balance sheet date. When we assess, we know bad debts is causing because of the fire accident happened in customer's place, which was not happened on balance sheet date. About this bad debts loss situation was not there on balance sheet date. So here it is non-adjusting event. Similarly, the fire accident occurred in our place, destroyed our stock on 31st March, and thereby it is non-adjusting event. Like that, very clearly we understand about the difference between adjusting and non-adjusting. It is RTP or NTP, again confusion will get. Just today morning I was scanning through the latest RTP and NTP. I found a beautiful question from AS4 requiring student to classify that as whether it is adjusting event or non-adjusting event. Hope you understand that, all of you. Event occurred. Check now whether the condition of this event was there on balance sheet date. Yes, now you understand it is adjusting event. No, sir, this event occurred. No, the condition arose only after balance sheet date. Then it is non-adjusting event. The adjusting event now it should be adjusted. Now, if for shake I don't know how the voice is affected. Non-adjusting event not to be adjusted, but we will discuss the report of approving and hope you are following. Or acknowledgement please give my ear. So the question that different days it was tested, my dear friends. So balance sheet days, 31st March, approval, 15th June, like that information given. So one thing is given, one company X. This is the company X for information. Company X acquiring company Y, all arrangements that is finalized, all arrangements finalized, my dear friends, before 31st March. But purchase consideration settled only in May. Purchase consideration settlement is May. So, either adjustment, is it adjusting or non-adjusting event? Everything has been finalized before 31st March, but payment of consideration happening in May. So, is it adjusting or non-adjusting? It is adjusting only. It is adjusting only. But இதே problem in another situation was non-adjustable. How na? Company X negotiating for acquiring company Y. Then terms finalized in April. Payment of consideration in May. Company X negotiated for acquiring Y before balance sheet date. Before balance sheet date. Then everything finalized in April. Then May la purchase consideration settled. June la the approval happening. Adjusting or non-adjusting? Non-adjusting. Because negotiation is not a situation of that we are already acquired company by. Everything already finalized, that is acquired. The payment is deferred, that's all. அப்போ ரெண்டுத்துக்கும் difference இருக்கு. Everything is already finalized is one situation. Mere negotiation on balance sheet date, subsequently confirmed that we acquired, but it is not an adjusting event. Like that, same question repeated for transfer of sale of an asset also. This is acquisition of another company, sale of an asset. Sale of an asset in two situations they used to come. Don't create an answer. So what we understand, one asset was sold, to be sold, and everything completed before balance sheet date. Registration is completed in April. Then it is adjusting event, substance over form. But the consideration is determined and registration happened in April. Then it is non-adjusting event. That clarity is needed, my dear friends. For acquisition from existing data, the code of property is same thing only. So you understand. Technology, my dear friends. So similarly, my dear friends, break is happening in YouTube or Zoom. Times. So watching through the hello. Is it okay? Hello. Adjusting event. Hello. Adjusting. Mic adjusting. Is the mic adjusted? Okay. Very sorry. Hello. Okay. So, okay. Huh. The same example, no, balance sheet date 31st March, approval is happening in June 15. There was information like this given. By 17th June, they discovered a theft that had occurred in February 2025. So balance sheet date is March 31, 25. Approval date is 15th June. 17th June, they discovered theft related to February 25. Balance sheet before theft discovered later on. Is it adjusting or non-adjusting? Is it adjusting or non-adjusting? Theft discovered. Thank you, Abrami. You should not mention this as non-adjusting. It should be mentioned as not an event as per AS4. Because, so first thing is, in the question, exam question, recently RTPO, MTLO included, my dear friends. So, it is not an event. Event means that occurred after the balance sheet date, prior to the approval of financial statements. So, in that case, you are understanding this is not an event as per AS4, my dear friends. Understood? Because it occurred, that is discovery happened after the approval. Once the approval is happened, there is no discussion of whether it is adjusting or non-adjusting. Is the latest problem, my dear friend. So suppose, and even though it is related to February 25, sir, balance sheet date is March 2025, adallam okay. Balance sheet date 31st March 2025, adallam okay. So, but the discovery happened after the approval. It is not an event. In the Murray case studies are all given, my dear friends. So, you can easily identify whether it is adjusting event or non-adjusting event, my dear friends. All of you, theft, fraud, purchase of business, sale of property, case filed against a company in April. Case filed against a company in April. Adjusting event or non-adjusting event? A suit was filed against a company for claiming damages of 5 lakhs. Is it adjusting event or non-adjusting event? No, a suit that was pending against a company before the balance sheet date, subsequently it gives rise to more probable scenario, then it is adjustable. A suit filed only after the balance sheet date cannot be considered as adjusting event. It requires only disclosure. A case filed against the company after the balance sheet date, which means on balance sheet date there was no case pending against the company. So even if it becomes probable after the balance sheet date, there was no suit pending against the company on the balance sheet date. Even balance sheet date I don't have the loss. It arose only after the balance sheet date. Either way, suit was filed before the balance sheet date, judgment came after the balance sheet date, or it become highly probable after the balance sheet date, then it is adjusting event. But suit filed after balance sheet date is non-adjusting event. All of you. AS5 also did not appear. So that way, first you should check first of all whether it's event or not. Then we should check whether it's adjusting event or non-adjusting event. Two other points you should know: dividend declared or dividend proposed after the balance sheet date, even if it is prior to approval, shall not be adjusted. It is only disclosed, but that disclosure will be in the notes. Declared dividend or proposed dividend or information will be provided in the notes. Generally, disclosure in report of approving authority, dividend disclosure alone in the notes. Next, some events, even though it is non-adjustable by conditions, because there was no situation on balance sheet date. But if such event affects going concern, then it will be considered as adjusting event. இதுக்கு ஒரு acknowledgement கொடுங்க. Please give an acknowledgement for this. This was the completeness of AS4 now. Additional 2 points. So, okay. AS5, my dear friends, primarily what? Grouping of income and expenses in the SOPL. So much of incomes, so much of expenses you have. All these income and expenses grouped into certain categories. What are all items? Ordinary activities, extraordinary items, prior period item, change in accounting estimate, change in accounting policy. Like that, 5 items initially listed. Ordinary activity na every activity that are conducted as part of business activity will be called as ordinary activity. Generally, no separate disclosure required. Note sleeve not required. In the SOPL phase sleeve not required any separate disclosure. But standard says that if any ordinary item, considering the nature, size, etc., if separately disclosed, provide better understanding to users of financial statement, such ordinary item will be separately disclosed, which will be called as anybody. Ordinary item generally no disclosure. So when you take SOPL of a company, you don't see anything called ordinary. Why na? Everything is deemed to be ordinary. But if you disclose, you feel it will give better understanding na, such item will be called exceptional. Ordinary but exceptional item. Like regular litigations against the company, not a specific case for a specific event. Normal sales related litigations will be considered only as an ordinary but exceptional items only. So then profit on sale of assets, loss on sale of assets, இதெல்லாம் can't be considered as abnormal items. They are only exceptional items. So like that we understanding. Write down of inventory to NRV. For compliance with AS2, we are writing down to NRV, recognizing a loss, exceptional item only. Then retrospective restatement of wages and salaries that will give extra payment in the current year will be considered only as exceptional item. These are examples. Retrospective increase in salary. And the additional payment of last year paid in current year will be accounted only as ordinary but exceptional. So because it requires separate disclosure, if provide disclosure will give better understanding to users. Extraordinary means clearly distinct from ordinary activity. Clearly distinct from ordinary activities. What are the examples? So theft loss, accident loss, natural calamities loss. Idellame we are understanding as extraordinary. Sometimes certain incomes will be also be considered extraordinary. Extraordinary, it could be income or expense. So what we should do for extraordinary? No separate calculations and all. The nature, amount, effect should be disclosed in a manner so that its impact on the profits can be perceived. In other words, we will disclose profit before extraordinary, profit after extraordinary. Like that we are understanding, my dear friends, about extraordinary items. All of you, ordinary, exceptional, extraordinary. Extraordinary, natural calamity loss, theft, fraud, etc. Accidents in transit, accidents internally in the factory. All these things are extraordinary losses, and sometimes there will be some incomes. All of you, acknowledgement. Prior period item refers to income or expense arising or recognized in current period. Arising kuda illa, recognized in current period on account of error or omission in one or more preceding period, which means last year inventory mistake rectified in current year, last year depreciation mistake rectified in current year. All these things will be considered as prior period item. Suppose salary increase, as I told you, previous year 23-24 salary was 30 lakhs. Now current year 24-25 salary increased by 50%. Salary increased by 50% with effect from 1st Jan 24. With effect from 1st Jan 24. First question, mathematical question. How much will be the salary payment in the current year? Last year salary 30 lakhs. This year increased by 50% with effect from 1st Jan 2024. With effect from 1st Jan 24, which means retrospective effect. Increase is not from 1st April 24, it is from 1/1/24 onwards. So first question, mathematical question, what is the salary payment in the current year? Anybody? Salary payment in the current year? Salary payment in the current year, how much? Total salary payment in the current year. Total salary payment in the current year will be, my dear friends, normal salary 30 lakhs, 50% increase. Upon your understanding, it is 15 lakhs. So that's 45. Then the increase for previous year 3 months. Previous year 3 months. Not for the entire previous year. Previous year 3 months. For previous year 3 months salary is 7.5 lakhs. So, and the 7.5 lakhs is not getting paid in the current year. Adukana increase, which is increase for previous year 3 months, which is last 3 months 7.5, that is 50% increase na 3.75. So you will pay 48.75 lakhs. 48.75 lakhs payment in the current year. In the payment lab, how do you present in the SOPL? What header it will be presented? 45 lakhs, no doubt, it will be fully presented as ordinary. Super. 3.75 lakhs, we know it is recognized in current year, but I know it relates to last year. But it will be presented as what item? 3.75 recognized in current year, because last year I can't go, but I know it is relating to last year. But it will be recognized as dash item na. It is not a prior period item. Anything relating to last year is not prior period. So prior period na, there should be error or omission in one or more preceding period. Now extra 3.75 you are paying not because of error committed in the last year. It is not because of change in accounting estimate also. It is not because of change in accounting policy also. Sir, policy only you changed, no sir? Correct pa. Salary policy I changed. Salary policy is not accounting policy. So whenever you change your accounting policy, that will be accounted as change in accounting policy. So this is only an ordinary item, and that will be presented as an exceptional item, because we know this year profit is reducing, but it is not going to come in every year. So people will have better understanding if I highlight this information. So this is presented only as ordinary exceptional, my dear friends. Or acknowledgement. Okay. Our prior period na, definitely there should be error or omission. Anything related to last year coming in the current year should not be considered as error or omission. Last year we made a insurance claim. We made insurance claim, but it was not accounted. This year claim received. So it is accounted in the current year. Up it is dash in the current year. Last year claim made, not accounted in last year. This year claim received, accounted in the current year. Our claim received in the current year will be accounted as what item in the current year? Because of some accident happened in the last year, we made a claim. So this is again not a prior period item, because when you make the claim, it can't be accounted unless the claim was accepted or settled. Claim cannot be accounted. So it is only a contingent asset. So it cannot be accounted in the last year. This year only the certainty about the receipt arose. this year only it can be accounted. Thereby, even though I know it relates to last year, but it is arising in the current period, I did not commit any error in the last year by omitting it. Omission was correct accounting only. You should not have accounted in the last year. Again, it is not prior period, my dear friends. Prior period na inventory overstated, understated, machinery wrongly accounted, depreciation accounted wrongly, இதெல்லாம் தான் subsequently rectified na will lead to prior period item. My dear friends, acknowledgement, do you follow? Similarly, my dear friends, see, you find theft of previous year discovered in current year, theft of previous year discovered in current year. So naturally, to be accounted in current year, discovered in current year, so naturally should be accounted in current year. It will be accounted as dash item in the current year. Ordinary, ordinary exceptional, extraordinary, prior period, change in accounting estimate, change in accounting policy. So what is that na? This prior period. This will be considered as an omission in the last year. Anga you can't tell, I don't know, that is why I omitted. Other reason kadayadu. So thereby please understand, you omitted to detect is an omission. It is a loss of previous year. It is omitted to be accounted in last year. So it is accounted in current year. Will be considered as a prior period item. All of you, for acknowledgement. Theft of current year discovered in the current year. What is that? Theft of current year or fraudulent transaction of current year discovered in the current year is extraordinary. Like that we are understanding. Very good. Change in accounting estimate means in SOPL there will be lot of items which are estimated, like provision, depreciation amount, idella estimates da. Now these estimates can subsequently change. These estimates can subsequently change, but naturally that should be considered as change in accounting estimate, and that will not be presented as a separate new category. It will be presented either as ordinary or as extraordinary based on the nature of original estimate. If this provision recognized was ordinary na, change in provision is also ordinary. If this provision was extraordinary, then change in provision is also extraordinary. So like that the standard mentions, my dear friends, all of you. And you should also in the notes provide the effect of such a change in estimate. The effect of such a change in estimate. That's a very important thing. What you should remember is depreciation method change is not change in policy, is also considered change in estimate. Useful life changed, residual value change, method change, ellame it is change in estimate only, not change in policy. Hope you remember. And change in accounting policy, what we should do? Whenever there is change in accounting policy, effect, the nature of change in policy, effect of change in policy, reason for change in policy should be disclosed. That's all. Okay. But the important thing what you should remember is, the base pani many times tested area enna, few things are not considered as change in accounting policy. Even though the change is happening there, it is not considered as change in accounting policy. What and all abdina, you have adopted a new policy for some transaction which has changed in substance, which means the way in which you are doing the transaction completely changed. You were giving pension to employee fixed amount, like 50 lakhs in different months I will pay abdinu or scheme irundhathu. That time one accounting policy was there. Now the pension scheme revised. it will be 25% of last drawn salary for certain number of years of service. Like the scheme changed, so transaction changed, thereby you are creating a new accounting policy. That is not considered as change in accounting policy. Earlier you are making sales only through brokers. Now you are making sales through brokers also directly to end customers. So because of that accounting policy changed, it will not be considered change in accounting policy because the substance of transaction changed. This is one point. Second, a new policy is applied in the current year for some items which were never existed in the last year. This new policy or new policy? Appa change done? No change, because these items non-exist in the previous year. Third, new policy is applied for certain items. This item new in the current year or no? This item was there in the last year but was not material in the last year. This year only these items become so material. Appa we are applying a new policy for that. Aduvum not change in accounting policy. Appa change in substance of transactions, not change in accounting policy. New policy for non-existing items, not change in policy. New policy for items existed but not material, aduvum not change in accounting policy. This base money many times questions tested. Hope you remember, all of you. Okay. Appo classification into ordinary, ordinary exceptional, extraordinary, prior period items, change in accounting estimate, change in accounting policy. So if it is change in accounting policy, what you should do? Nothing. The nature, effect, reason. Why did you change? Because change is not always permitted. Change is permitted only when it is required by accounting standard, required by statutes, or required for better presentation of financial information. This is the major point of AS5, my dear friends. With that we are putting it into AS5, AS7, construction contracts. Can I proceed, all of you? AS7, significant problem came in the previous exam, so not much expected still. It's a significant standard. Many times comes profit or loss means contract revenue minus contract cost for the period. Will give you profit or loss, my dear friends. To find out contract revenue for the period, it is nothing but total contract revenue into percentage of work completion. Percentage of work completion. So appa easy. You need to identify what and all. Now you need to compute percentage of work completed. We should identify total contract revenue. You will get based on this revenue for this year. Then you will have contract cost. Contract cost mattum, it is actual cost incurred in each year, will give you profit or loss. This is the basic concept, but to apply this, we told you in the exam in practical will be always finding something called cumulative percentage of work completion. We will never compute percentage for each year separately. We always find out cumulative percentage of work completion. Why is it so? Because it is, if it is going to be, it is expenditure based percentage completion method. Expenditure based na, first year I incurred 20 lakhs, total cost 80 lakhs. Next year I incurred another 30 lakhs or 35 lakhs, total 80. Next year I incurred 25 out of 80 na, then it can be easily computed. But this denominator can differ from year to year. The total cost can differ from year to year. Because of that, what we told is that always compute cumulative. Suppose first year 20, second year 20 plus 35, 55 na, 55, and denominator has become 100 na, then 55 by 100. So you will get cumulative percentage. Sorry sir. From cumulative, can I find current year percentage? Not required. What we will do now, contract revenue is equal to total contract revenue into cumulative percentage will be applied to give you cumulative revenue. Cumulative na year 1 revenue and year 2 revenue together. From that we will deduct past recognized revenue to get current year revenue. Hope you remember AS7 application. Appo revenue minus cost equal to profit or loss. What is revenue of a year? Cumulative revenue minus past revenue will give you current year revenue. How to find out cumulative revenue? Total contract revenue into cumulative percentage of work completion. Appo we remember, we always compute cumulative percentage of work completion. Hope you remember these calculation, my dear friends. Okay, so that way, suppose my dear friends, for year 1, cost incurred is say 30 lakhs, estimated further cost 50 lakhs, estimated further cost 50 lakhs, contract revenue 100 lakhs. What is the profit or loss? What is the revenue cost? Then what we will do first is find out percentage. 30 lakhs by 50 lakhs 30 plus 50. You should be careful now. I told you in the classroom, sometimes they will give estimated total cost, then the total cost directly will take in the denominator. If they give further cost, then 30 lakhs by 30 plus 50 will give you total cost. So can anybody tell the percentage here? Chuma number given, what is the percentage? I think it is somewhere 37.5 percentage. 30 by 30 plus 50 into 100, 30 by 80 into 100. Percentage you tell. For profit or loss equal to contract revenue 100 lakhs into 37.5%, 37.5. Contract cost, no computation. Actuals of that year will be given in the question 30. So profit is 7.5. Like that we are arriving in first year. What happened in second year I will tell you, my dear friends. So you incurred cost in second year. Cost incurred in second year. Cost incurred in second year is 24 lakhs. Cost incurred in second year 24 lakhs. Estimated further cost is 36 lakhs. Estimated further cost 36 lakhs. Contract revenue increased by 5 lakhs. Contract revenue increased by 5 lakhs. But how to find a profit or loss? First to find out cumulative percentage. Cumulative percentage, how to find out? Last year incurred 30 lakhs. This year incurred 24 lakhs. Then total cost incurred 54. 30 plus 24 plus further cost 36 lakhs into 100 will give you the percentage. 54 lakhs by 90 lakhs into 100, it comes to 60 percentage. How to find a profit or loss? Contract revenue equal to 105 lakhs into 60 percentage. Miss panna. This is called revenue of first year and second year. 63. Okay, 63. So very good. Thank you so much. 63. Contract cost always actuals. Actual is only 24. So we'll give you profit of 39. We'll give you profit of 39. Hope you understand, all of you. Ayo, 63 illa. I told 63 illa. Vitradingan sonna. Tappu. 63 minus 37.5. I'm sorry. Okay, so 63 is cumulative. 63 is cumulative minus 37.5. So is 63 minus 37.5 is 25.5, and thereby profit is 1.5. Revision class mistake, sorry. So like that we should be finding out the profit or loss. This is the percentage application throughout you should do. Innor problem area you should remember. What is that now? If the outcome of the contract is loss, suppose contract cost in year 1, another problem 70 lakhs. Estimated further cost to be incurred is 130 lakhs. Estimated further cost. Contract revenue is 150 lakhs. Contract revenue is 150 lakhs. But we are understanding by the end of the contract, we will be incurring 200 lakhs cost. We will be getting a revenue of 150. So outcome at the end of the contract, we will be getting loss. Then the standard says entire loss should be recognized immediately by creating provision for further loss. Or how much provision required? How much provision required? Aduva. First find out percentage anyway. Even though full loss to be recognized, find out percentage. 70 by 200 lakhs into 100. It is 35%. Appo, we understand, my dear friends, it is provision required. Provision calculation eppdina, it is first of all total loss is how much? Total loss is 50 lakhs. Total loss after the contract will be 50 lakhs. Appo current year loss at 35% if you calculate, it comes to, it is 17.5 nanikiren. So thereby further losses 32.5. How to account this in a contract P&L? Contract P&L you will show contract revenue. Contract revenue only proportionate you will show. How? It is 150 lakhs into 35%. So it will come to 52.5 is what I think so. Just confirm, my dear friends. Then contract cost is 70 lakhs. Then we are creating provision to the extent of 32.5 lakhs. Thus you will book a net loss of 50 lakhs. This is how you should be accounting. This is a very important problem area in contract. So even though last time came in the point, always remember outcome of the contract is loss. Entire loss should be recognized immediately. Then just before the examination, see the conditions for combining and conditions for segmenting contract, my dear friends. This is the problem area. One basic of finding profit or loss by the cumulative approach. Other one is outcome of contract is loss. What should be done? Third, combining, segmenting. These are the problem areas from AS7. Combining means what? Separate contracts, but accounts will consider them as a single contract. Legally separate contract, accounts is single contract, called combining. Segmenting, legally one contract, but it requires so many assets to be constructed. For accounts, we may consider each of the asset as separate contract. So which is in conditions to be satisfied for combining, segmenting, you can learn, my dear friends, later on. All of you, with that we are putting it into AS7, taking AS9. All of you there? Okay. Revenue recognition, my dear friends. We should satisfy the conditions like, performance should be satisfied. Performance. Then certainty in collection. Reliably measurable. So revenue should be recognized only if performance is completed. To get a revenue, you should do something on the performance completed. Then you are certain that money will be collected. Amount can be reliably measurable. If these three conditions cumulatively satisfied, revenue can be recognized. This is basic. Adala sale of goods, services, then the use of resource, interest, dividend, royalty. Adala we told you interest to royalties on accrual basis, but interest on time accrual basis, royalty on the basis of terms of agreement. It may be based on production, may be based on output or sales. Like that we decided royalty should be paid on some basis, others should be taken. Dividend only when it is declared. Dividend can be recognized as income only when it is declared. Like that we understood. Sale of goods, special issues are there. And the special issue based the questions can arise. What and all abdina? So we have sold goods but delivery delayed at buyer's request. Delivery delayed at buyer's request. In that case, it will be accounted as sale if significant risk and reward already transferred. Major part is whether the risk and reward incidental to ownership is transferred. If the delivery is delayed at buyer saying we are doing some warehouse renovation, but I have already paid the money and all, invoice raised. Only thing is I am telling you 2 weeks later you deliver the goods. Then supplier will account it as sale at the time of raising the invoice and collecting money, not at the time of delivery. We are telling delivery delayed at buyer's request. Then in case of consignment sales, sale is recognized only when the goods are sold by consignee to outsiders. In case of sale or return transaction, then sale is recognized only when the goods are accepted by the customers or time limit expires. Time limit expires. Sorry. Similarly, my dear friends, sales made to certain distributors. Sales made to distributors. So we are car manufacturing company. We don't sell car directly to customers. We will be selling cars to distributors. Panga risk reward should be assessed. If significant risk and reward transferred, then it should be recognized as sale immediately. No. Only when the distributors sell to the customer, then only they will give money. Otherwise, the risk limit is always there. Then don't recognize sale. A conditional answer that you can provide, my dear friends, when sale is happening to distributors. Then there is another problem area, which is sale and repurchase agreement. Sale and repurchase agreement. Today, 1st April, I am selling goods for costing 5 lakhs for 7 lakhs. Then on the same day, I am telling that after 3 months, I will buy the same goods for 8 lakhs. So sold and I will repurchase. 2 agreements made on the same date. So in that case, standard says there is no sales here. No sales, no revenue. This is considered only as finance transaction. A person who is selling initially collecting 7 lakhs should be accounted only as loan arrangement. Cash to loan 7 lakhs, that's all. Then later on I will repurchase the goods back. Appa marubadiyum purchase goods won't come, my dear friends. It is just that loan is getting paid including interest to the extent of 8 lakhs. Like that, this should be accounted as finance transaction rather than sale and purchase transaction. Even though legally they would have created sale of goods transaction, purchase of goods transaction, account says that it is only a repurchase agreement. Understood? It should be accounted as finance arrangement. Consignee sale, sale or return transaction, delivery at buyer's request, the repurchase agreement, insurance related commissions and all will be recognized the moment the policy is effective. If the policy has effective date started, renewal date already started, then commission can be recognized. It is not that insurance commission will be recognized over the period of policy and all. So I, as an agent, insurance agent, made one customer to take a policy. So once the policy is effective, started, I will recognize a commission. It is not my duty to cover the policy, cover the risk for the entire year, 10 years, etc. and all. So I will recognize a commission the moment policy date is effective. In other services and all, so advertisements and all, only when the advertisements are published or telecasted. Like that, advertisement related thing has been given, my dear friends. So, and similarly, in relation to agency, only net commission can be booked as revenue. Agency mean one ticket booking agency, rail ticket, train ticket, cinema ticket booking agency and all may collect 600 rupees for the ticket, will pay 500 rupees to the other person. For them income is 100, 100 then they should show it as revenue. They should not show 600 as revenue, 500 as expense, because it is not their goods they are selling, somebody else's goods they are selling. Our agent should always book commission as their revenue and not the gross amount as revenue. Clarifications were there. So hope you understand. For acknowledgement, my dear friends. Are you all there? Before I go into asset based standard, my dear friends, due from, due to, you can learn. Is there any confusion? Due from, contract, cost incurred, cumulative, plus profit or loss, minus progressive billing. Progressive billing. So far cost incurred 800 lakhs, profit so far incurred 100. So thereby your incurred cost so far recognized profit you are entitled to receive from the customer. But if you have billed more than that, suppose you have billed 750 na, 150 is called still receivable. But if you have billed some 1000 lakhs abdina, then this will be shown as amount payable to the contractee. And the billing may be given in two forms as amount already received and yet to be received. That is retention money, together called as progressive billing. Either they will give billed value or amount already received this much, yet to be received this much. But together the progressive billing. The billing pays money, you will recognize either due from or due to. Your basic entitlement is what cost you incurred, what profit or loss you computed, together the amount receivable. Then deduct the billed amount. Billed amount may be more or less. Billed amount less na, still more receivable from contractee. If its billed amount is more na, then the amount is due to contractee. Like that the concept is there. Okay. Asset based standard before, let me quickly discuss about the AS 17, my dear friends. Segment reporting. Segment reporting, what we primarily understand is every business will have three categories of segment. Maximum business segment, geographical segment by location of customers, geographical segment by location of assets. So or business or company dealing in different products, now we call it as business segment. Company making sales at different places of the state or places of the country or places of the globe, we call it as geographical segment by location of customers. The company is having lot of assets at various places, generally by production plant. We consider as geographical segment by location of assets. So we have maximum three categories of segments in a business or in a entity. Three categories of segment. What we normally do is fix one as primary reportable segment. Fix one of this category as primary. It is not our duty to do, management will do. Fix one as primary. The other two will automatically become secondary reportable segment. What is the purpose of doing so? Because segment related we will provide information. Other primary na we will provide little comprehensive information. Secondary na very less information we will provide. Condensed information we will provide. More comprehensive information. What information you will provide? The top line item of SOPL, that is revenue, segment revenue. Then various expenses are no. Bottom line, profit or loss, segment profit or loss. Then total segment assets, total segment liabilities. This is key information. Sales, profit, assets, liability. Total asset, total liability. These are the key for information. Adukapuro depreciation, amortization. Any other significant non-cash items. Depreciation is non-cash item. Other than depreciation, any other non-cash item. Another thing is, this is the total asset balance. But in this total assets, if you purchase any asset during the current year, that information. Current year acquired asset information. இதெல்லாம் தான் அதுக்கப்புறம் ஒரு எக்ஸ்ட்ரா ஒரு இது reconcile. These are the information to be disclosed. Again, this is not a major problem area, so don't worry. But we have solved one question in the exam, classroom, identifying revenue, P&L, asset, liability, how to present the report and all. Sometimes it can be tested because A17 last 2 times it did not test it, it can come. So please go through that particular question, presentation part. But most of the times what comes is selection. Suppose when we have many types of segments. You need not report every segmental information. Suppose I have 30 different business segments, 30 business segments. All the 30 need not be selected for reporting. Mandatory you should select few segments for reporting. And the mandatory selection rules what? அதுக்கு தான் we told 10% threshold, in which we discuss 10% revenue threshold, 10% result threshold, 10% asset threshold for the purpose of selecting reportable primary reportable segment. Reportable primary reportable segments. What is that, sir? I have 30 products. 30 products oda revenue. Each product will have revenue. So product A, product B, product C. So every segment will have revenue. Take total of all the segments revenue. Suppose it is like some 3000 lakhs na, in that 10% to be calculated. So 10% is say 300. Now whichever segment is having revenue of 300 or more will be considered as selectable segments. Suppose segment A has got 320 selected. Segment B is 270 not selected. Like that we will go for selection. Suppose how to select? Take the total of revenue of all the segments, apply 10%, then whichever segment is having the 10% condition, adala we will be selecting. Then same is the principle for result, same is the case for asset. Take total value of all the asset, apply 10%. Whichever segment is having the 10% criteria satisfied will be selected for reporting. And for reporting, my dear friends, there is no need that all the conditions should be satisfied. Even if a single condition satisfied, it is reportable, which means one segment is a segment X. I don't have much revenue, I don't have profit or loss, but I have lot of wealth, I have lot of assets, then it is reportable segment. Like that, even if single condition satisfied, it is reportable. Idala segment result ku mattum one confusion arises. What is that? 30 segment is there, adala 20 segment is having profit, 10 segment is having loss. Appo 20 segment of profit is totally coming to 800 lakhs, 10 segment of loss coming to 900 lakhs, net profit to the organization is 100 lakhs loss. If selection will be based on profit or loss, which number? 800 or 900 or 100? On which number based 10% application should be done. So thank you so much. Hope you remember everything. So it is not based on 100, my dear. It is based on aggregate of profit or aggregate of loss, whichever is higher in absolute terms. Whichever is higher in absolute terms. So the sign alla marande 800 as a number, 900 as a number, which is higher? 900. Otherwise, what you will do? 800 or minus 900, whichever is higher, now always you will think 800. Absolute value 800 or 900, whichever is higher. We should take what? 900, other 10%. So thereby 900 into 10%, 90. Now 90 as a number will be used for selecting which segment? Profit segment or loss segment? 90 as a number will be used for selecting profit segment or loss segment. Thank you. Both profit segment as well as loss segment. Any segment having profit of 90 or more will be selected. Similarly, any segment which is having loss of 90 or more, adum selected. Just because of this 900 was arrived for determining 10%. Thereafter, we will apply this 90 not only for loss segment, we will also apply for the profit segment selection. Hope you remember. Appo A17 la romba important selection based sum at least 1 or 2 questions do. Then other conditions are there, not many times tested. Previous year reportable na, this year reportable. But previous year reportable based on 10% threshold na, this year reportable. Then management discretion they can include more segments. Other important selected segments oda external revenue should be at least 75% of the company's revenue. Selected segments. Suppose out of 30 segments, condition satisfied only for 6 segments. The 6 segments order external sales comes to say 800 lakhs. Total sales is 1200 of all segments together. But 75% na, it comes to 900. Appa select panna segments is not satisfying that 75% threshold. Appo you should identify further segments even though they don't satisfy 10% condition, because 10% condition is applied for finding minimum reporting. So can I include more reporting na? Yes, you can include more reporting. 30 segments I have, 30 I want to report. 30 segments I have, I want to report only 3 segments. Anga option illa. If 5-6 segments satisfy 10% threshold na, definitely you should report 6 segments. There you don't have option report only 3 segments. So minimum reporting we are ensuring, not maximum reporting, my dear friends. This selection based, again I don't want to put the academical theoretical points here. Selection based problem. Adukapram segment revenue, segment result, segment asset, segment liability presentation in one of the problem which is there in ICA module, which we covered in our classroom also. Solve those 2 problems, my dear friends, without fail. Hope you are understanding, all of you. For acknowledgement. Okay. AS 10, 12, 16, 26, 28. When you buy a property, plant and equipment, what is the cost? Cost is nothing but, my dear friends, purchase price plus directly attributable expenses, present value of dismantling liability. So many times tested, and since last exam cost related tested already. Purchase price consists of list price minus trade discount plus non-refundable duties and taxes. Already we know. Directly attributable expenses consist of employee expense, employee cost, cost of site preparation, leveling the thing, creating some fixtures, etc. Machinery should come, the level should be made, wall should be constructed, some electrical fitting should be made. Idella cost of site preparation. Delivery and handling cost, truck loaded, transportation, unloaded, handling cost, delivery and handling cost, assembling and installation cost, then professional fees. So to make this machinery, we took the design made by an architect, so that fee. Then it could be trial run cost, net of proceeds from trial run, cost, net of proceeds from trial run. Then borrowing cost, interest cost, if the asset is a qualifying asset, so it takes substantial period arunda, then interest also should be added. Appa takkunu going to borrowing cost, my dear friends. Borrowing cost you know there are 2 types of borrowing: specific borrowing, general borrowing. Specific borrowing na, it is actual borrowing cost incurred minus temporary investment income. Actual borrowing cost incurred minus temporary investment income. General borrowing means using capitalization rate. Test run expenditure I already conveyed. Trial run cost and test run cost. Trial run net of proceeds from trial run. So proceeds from trial run should be deducted. So borrowing cost வந்து specific borrowing are the actual borrowing cost incurred minus temporary investment income. General borrowing are the capitalization rate. What is capitalization rate? Weighted average cost of borrowing. What is that weighted average cost of borrowing? Total interest by total borrowing into 100. Like that we identify something called capitalization rate. So specific borrowing na actual borrowing cost incurred minus temporary investment income. சரி, அப்போ ஒரு example my dear friends. So we borrowed some money, specific borrowing. அதில் borrowing cost incurred, interest cost incurred is 70 lakhs. Temporary investment income in year 1 7 lakhs. Temporary investment income in year 1 it is 7 lakhs, like this information given. Now in year 2 it is fully utilized, by year 1 end amount was fully utilized, which means no more surplus amount invested. Year 1 la da some portion spent, some portion not spent, invested, got you some income. அப்போ year 1 end la அது already fully invested, fully spent for qualifying asset. Then year 4 la my dear friends, year 4 beginning 10% of the project already completed and ready for use. 10% of the project already ready for use. About how much borrowing cost will be capitalized for first year? How much borrowing cost will be capitalized for first year? Specific borrowing, we incur borrowing cost of 70 lakhs. There is savings, surplus amount invested, and we got investment income 7 lakhs. So how much borrowing cost will be capitalized in first year? Anybody, how much borrowing cost will be capitalized in first year? Okay, about specific borrowing now, 70 minus 7 it is 63 lakhs will be capitalized in first year. Second year la there is no temporary investment income, thereby it will be 70 lakhs in second year as well as third year. Fourth year what happens? So fourth year, this interest every year we are incurring, it is not that only in the incurring year we will capitalize borrowing cost. As long as keep on paying borrowing cost, keep on capitalize until the asset is ready for use. But 10% already ready for use abdina year 4 la 90%, again 63 lakhs na will be capitalized for fourth year. Like that we are understanding, my dear friends. So acknowledgement kodunga. Are you all there? Okay, so like that we are understanding about the borrowing cost, general borrowing, specific borrowing, based questions are expected, my dear friends. So careful. Adukaprom one problem area, so we don't have much time to connect that. AS11, AS16 connected problem area. What was that AS11, AS16 connected problem area? We know when you take in a loan and if it is representing in foreign currency, that should be restated. Loan in foreign currency always should be restated as per AS11. Monetary item always restated. A restatement will give you gain or loss, recognizes exchange gain or loss as per AS11. But AS16 says that if you have taken a loan, some portion of the exchange loss we will consider that as borrowing cost. Some portion of the exchange loss will be considered as borrowing cost. To what extent A16 says that will be adjusted as borrowing cost? It is difference between interest in the reporting currency and interest in foreign currency. That interest or amount equal to that much will be considered as borrowing cost from exchange loss. For example, what we are telling is $2 lakhs loan taken. $2 lakhs loan taken. At that time it is 70 rupees. Apo rupees the loan was 140 lakhs. Interest was in dollar, it was say 5%. Rupees let's say it is 8%. Apo actually how much interest has to be paid means interest actually to be paid is 2 lakhs டாலர்ல 5%. அதான் ரியல் இன்ட்ரெஸ்ட் பேமெண்ட். ஸோ ரியல் இன்ட்ரெஸ்ட் பேமெண்ட் இஸ் 2 lakh டாலர்ல 5%. அப்போ $10,000 தான் இன்ட்ரெஸ்ட் ஆக்சுவலி டு பி பெய்டு. நவ் இயர் எண்டில் $1 is equal to 75 rupees. அப்போ இன்ட்ரெஸ்ட் ஆக்சுவலி பெய்டு ஹவு மச்னா $10,000 into 75 rupees, it is 7,50,000. This 7,50,000 is anyway interest borrowing cost na, adala no doubt. Actual interest payment is borrowing cost. Now apart from this interest cost, there is an exchange loss. What is exchange loss? The 2 lakhs which was originally converted at 70 rupees as 140 lakhs now should be increased to 150 lakhs. Even though we are not repaying the loan should be restated to 150 lakhs. Appo we are having some exchange loss from the restatement of loan to the extent of $2 lakh into 75 minus 70, that comes to 10 lakhs. This standard says that some portion of this 10 lakhs will be accounted as per AS 16, balance will be accounted as per AS 11. Some portion how much? It says that as per AS 16, interest in rupees is how much na? 140 lakhs loan only you would have taken, not 150. Now only it is become 150. You would have taken 140. Though you didn't took in rupees, you would have taken 140 at the rate of say 8% na. What would have been the interest? It would have been technical 140 na. It is 280. 11,20,000. Then interest in dollar actually paid was 7,50,000. I think so. 7,50,000. So thereby to the extent of 3,70,000 from 10 lakhs to the extent of 3,70,000 will be considered as adjustment to borrowing cost. Remaining 6,30,000 will be exchange loss as per AS 11. Do you follow? So I took a loan of $2 lakh, 70 rupees exchange rate. Appo Indian value of loan 140 lakhs. But actual interest payable is 5% in dollar, which is 5% of $2 lakh, which is $10,000. And I paid $10,000 at the time of payment. It is 75, so I paid 7,50,000. That's borrowing cost. Now what problem is, the 140 lakh loan restatement normally exchange loss as per AS 11. Standard says no, some portion of that exchange loss will be accounted as per AS 16. How much na? Difference in rupee interest and difference in dollar interest. Had you borrowed in rupee 8% interest, you would have paid 1,12,000. But because of dollar, you got lower interest of 7,50,000. Interest saving to that extent, the exchange loss will be adjusted as borrowing cost. We are telling. Are you all following, my dear friends? For acknowledgement. So remaining will be accounted as per AS 11. The only thing you should be understanding is that suppose exchange rate is 72 rupees, abdina, then it is 70 becoming 72, so it is 2 lakhs into rupees 2, it is 70, then it is only 4 lakhs. 4 lakhs is the exchange loss. In that case, interest in rupees, which is 1,12,000, and interest in dollar is how much? Interest in dollar, it is 10,000 into 72, 7,20,000. 7,20,000. This will give same answer. I just want to create a different scenario. Suppose exchange rate $1 equal to 71. Then 2 lakh into $1. So 2 lakhs the total exchange loss. Adala AS 16 how much adjustment na? Interest in rupees 1,12,000. Interest in dollar 10,000 to 71, 7,10,000. So you will be getting the difference of 4 lakh and 11,20,000. So 4 lakh 10,000, but total amount itself is only 2 lakhs. In that case, this will be restricted to 2 lakhs. This amount you should be aware of, my dear friends. All of you. It is exchange loss, that is instead of 75, 70 becomes 71. Appo exchange loss 2 lakhs. 2 lakhs na how much is adjusted to borrowing cost? Na? Calculation says 4 lakh 10, but you can't adjust 4 lakh 10 because entire discussion is out of 2 lakhs, how much can be adjusted to borrowing cost? So it will be restricted to 2 lakhs. Like that we are creating the next situation. Hope you understood this situation also, my dear friends. Okay. For A16 la idu oru problem area, then specific borrowing, general borrowing, treatment, another problem area. This is core problem area from AS16, my dear friends. Then when you have a PPE purchase for 20 lakhs, government grant received to the extent of say to the extent of 4 lakhs. Government grant received 4 lakhs. There are two treatments. What is that? Deduct from asset, deduct from PPE, or account it as deferred government grant. So method 1, 20 lakhs minus deducted from the asset value na, you will show 16 lakhs. Suppose asset order life, my dear friends, is 5 years. Then you will be charging depreciation, say 3.2 lakhs, you will show 12.8 lakhs. This is one method. So you will have 3.2 lakhs depreciation the SOPL. Option 2 what? Option 2 la 20 lakhs is shown as asset value. Government grant is accounted as a liability. Then both asset and grant will be amortized to P&L. So here depreciation 20 lakhs divided by 5 years. 5 years na life. So thereby 4 lakhs. So it is 16 lakhs. Here 4 lakhs by 5, 0.8. So 3.2 lakhs. But what happens? SOPL you will find depreciation of 4 lakhs. Government grant amortized to the extent of 0.8 lakhs. Net effect if you see, it is only 3.2 lakhs. Upon government grant received in relation to a depreciable asset can be either deducted from value of asset or it can be shown as a deferred income and transferred to P&L in the proportion of depreciation. Transferred to P&L in the proportion of depreciation. All of you. For acknowledgement. This is the main problem area from government grant. Other grants are grant in the nature of promoter's contribution. Then if you are starting a new business at a new place, government says we will give some fund. That is what we call it as commencing a new business. Government is giving money is called as grant in the nature of promoter's contribution. That will be directly credited to capital reserve. It will be directly credited to capital reserve. But grant received for certain services rendered, water provision, we are going to give water to public, or we are going to give medical facility to our own employees or public. So adukku government is giving grant na, then it is generally deferred and amortized in the proportion of expense to be incurred. But if it is for the past services na, then the grant will be booked as income immediately. This is the other treatments of grant. And sometimes government gives us not cash but certain assets, either free or at concessional value. Government gives some asset at free of cost, it will be recorded at nominal value. Government give you asset worth 50 lakhs free. Then I will show asset to capital reserve 1 rupee, 1 rupee. That's all. That is sufficient. But if the government gives me asset at concessional value, 50 lakhs worth of asset, you can buy for 30 lakhs. Then I buy for 30 lakhs. I will show at concessional value. Asset to bank 30 lakhs. This is treatment of other grants, but predominantly it is depreciable related, depreciable asset related grant. Other treatment, then refund. You should be knowing the refund. AS12 also important standard. And the order that we are taking, my dear friends. So we understand when there is refund. Suppose another 1 year completed. Another 1 year completed. Then option 1 la what would have happened? Another 3.2 would have deducted, and thereby it is now 9.6 lakhs. Here what would have happened? Here in balance sheet, 16 lakhs, 4 more lakhs would have been deducted. This will be 12 lakhs. And here the deferred government grant, another 0.8 would have deducted. So thereby it is 2.4 lakhs. Sorry. When there is refund under option 1, what we should do? You initially deducted from asset. Now when you refund the grant of say 4 lakhs, it will be simply added to the value of asset, 13.6 lakhs. The depreciation will change. Will change. When the refund happen, then henceforth the depreciable asset has become 13.6 to be depreciated over a period of 3 years. So 13.6 by 3 will give you 4.53. 4.53. So accordingly we will be finding out the depreciation. But in the option 2, if the refund is happening, it will not affect the value of asset. It will not affect the depreciation. Their accounting is deferred government grant 2.4, P&L 1.6 to bank 4 lakhs. You refund 4 lakhs, bank 4 lakhs, debit to the extent of DGG available, balance in P&L. It doesn't affect the value of asset and thereby it doesn't affect the depreciation under option 2. But option 1, it affects the depreciation. This area you should be aware of, my dear friends, all of you, in treatment of government grant. So we started with PPE. PPE cost we shift to borrowing cost and government grant, and those provisions we have completed. Hope you understand, all of you. Or acknowledgement. My dear friends, PPE cost determination is one area. Adhe mari treatment of revaluation profit or loss. Revaluation profit means normally revaluation reserve. Revaluation loss means normally debit the profit and loss account. This is normal treatment. But whenever you have profit, check is there any such revaluation impact in the past. In the past, if you have revaluation impact, now you are having loss, previously profit, then the profit will be reversed, then we will provide original treatment for loss. In other words, previous year profit 5 lakhs, you credit a revaluation reserve. Now loss 7 lakhs, then out of 7, 5 lakhs will be adjusted against revaluation reserve, balance 2 lakhs, you give original treatment which is P&L debit. Okay. Previously loss of 10 lakhs, debited P&L. Now profit of 12 lakhs. In that case, to the extent of the previous loss, now you credit P&L. Balance profit, you credit revaluation reserve. Hope you remember, all of you. Or acknowledgement. My dear friends, or asset having a carrying amount of 20 lakhs. In the carrying amount, some indication notice will be testing for impairment by computing recoverable amount, which is highest of two value NSP VIU. Even though in the classroom we discuss so many things, question will give NSP, question will give VIU, or they may ask you to find out VIU, which is discounted cash flow. So you will get NSP VIU, net selling price, selling price minus selling expense. VIU, future cash flow discounted. These two values, higher value is called recoverable amount. If carrying amount is greater than recoverable amount, difference is recognized as impairment loss. Difference, the problem area from impairment. So you should know basic concept. That's based on testing will be made. Don't complicate yourself with the goodwill and that, this, etc. and all. Just about the impairment and the recognition of impairment loss. Okay. Carrying amount 20 lakhs, NSP 16, VIU 17. Then recoverable amount is NSP 16, VAU 17, value in use, VAU is value in use. But recoverable amount is சரி, okay. Above it is 17. Okay, above 17. Above thereby, do you have impairment loss? Do we have impairment loss? Carrying amount is greater, so there is impairment loss. Either way, VAU was 22 lakhs now, there is no impairment. Difference is not impairment. VAU is already greater now, no impairment. So here we are understanding the 17 lower than carrying amount, so difference of impairment loss. Impairment loss 3 lakhs. At the point, where will you adjust impairment loss? If you have balance in revaluation reserve, then adjust the impairment loss in revaluation reserve. Otherwise, adjust in P&L. Adukavaga we discuss immediately impairment. For revaluation reserve balance can be used for adjusting the impairment loss. And still you have impairment loss, that will be adjusted in P&L, my dear friends. Everybody? Our basic test of impairment. Basic test of impairment, sir, where we use PV annuity factor. Cash flow, same cash flow for all the years, now we'll use annuity factor. If the cash flows are different in each year, now we'll be using present value factor for discounting. Discounting technique. For all the 5 years, I have 8 lakhs cash flow. 8 lakhs into 5 years annuity factor will be used. Year 1, 6 lakhs, year 2, 3 lakhs, year 4, like the different cash flow, we'll use present value cash factor. Okay, so like that we understanding about how to calculate impairment loss, my dear friends, and also accounting for impairment loss, my dear friends. But 10 lende jump to 16, 12 impairment, 26 the same provision of AS 10 da. 26 same provisions of AS 10 da. Only thing is 26 la research and development expenditure you should be really aware of. Research phase expense always expensed. Development phase expenditure can be capitalized if certain conditions are satisfied. Technical feasibility, intention and ability to complete intangible asset, then future economic benefit, cost reliably measurable. Such conditions satisfied na intangible asset can be capitalized. Otherwise, development phase expenditure also should be expensed. Upon certain other points, once expense cannot be capitalized. Once capitalized can be expensed if subsequently conditions not satisfied. As far as amortization is concerned, it should not be more than a period of 10 years unless it is evidenced from certain contract. Residual value is always to be taken as nil unless evidenced from third party contract, binding sale agreement. Otherwise, residual value nil. Maximum life 10 years. Can it be less than 10 years? Yes. Can it be more than 10 years? Yes, provided I have evidence. If you estimate the life, it cannot be more than 10 years. That based on your problem came, RTP, MTFA and check பண்ணிக்கோங்க. So இதுதான் AS 26 oda treatment, my dear friends. Otherwise, basic what is cost, what is the accounting for subsequent disposal, all these things remains the same. AS 10 iduvum concerned, my dear friends. Okay, so that way we discuss some core part of these standards, my dear friends. Core part of these standards என்னெல்லாம் standards அப்படின்னா AS 10, AS 12. 10 oda initial recognition, revaluation profit, depreciation தான் core part. Other things like change in liability and all are not so considered core part, my dear friends. Then we discuss AS 12 oda government grant treatment, 16 oda problem area, only AS 11, 16 connected problem. Then other one is specific borrowing, general borrowing, specific borrowing, temporary investment income adjustment, general borrowing, capitalization rate computation. 26 or R&D cost. 28 la basic how to calculate impairment loss, where to adjust. These areas you should be knowing, my dear friends. All of you, are you all there? when you deal problem from AS22, it's going to be very easy. Though we discuss in classroom with so much of impact, 7 to 8 hours we spend, deferred tax asset, deferred tax liability in relation to certain expense or income. What we should do? If there is expense which is considered for accounting purpose and tax purpose, and there is some difference, and that difference makes the taxable income more. Difference makes the taxable income more. You are paying more tax, excess tax, prepayment, so it is deferred tax asset. So difference making taxable income more, it is deferred tax asset. Making taxable income less, deferred tax liability. That's all, over, standard over. However, there is some expense given, some repairs and maintenance given. Now this repairs and maintenance for accounting it is 2 lakhs. For taxation it is 3 lakhs. Repairs and maintenance for accounting 2 lakhs, taxation 3 lakhs. But thereby tell me it is DTA or DTL. Simple, standard 7 hours nadithinathu 1 minute we are explaining. So takkunu you should not tell like that. Repairs and maintenance is an expense. It is more for taxation. We need to know what is the impact. It is not which amount is more. The impact is it makes the taxable income less. If the repairs maintenance expense is more for taxation, it makes the taxable income less and thereby DTL. So we want to know the impact of difference rather than which amount is more. But here it is, repairs and maintenance is an expense. Higher expense for taxation makes the taxable income less and thereby deferred tax liability or acknowledgement. If it is some other heads of income and that income is more for taxation, makes the taxable income more, that's the DTA. Like that, very easy you can identify, provided this is the first time the difference arises, we call it as origination period, and in your examination question, most of the times it is origination period, very first time difference comes. But if the question specifically mentioned, it is reversal period. Reversal period. This example. Question says, it is reversal year. Okay. Repairs and maintenance accounts 2 lakhs, tax 3 lakhs. For tax 3 lakhs na, it makes the taxable income less. Taxable income less. That's correct. But it is not origination. Reversal. Appo origination year la, it would have made the taxable income more and thereby you would have created DTA. Appo thereby now it will be called as, suppose it is reversal year or then I will not tell this is DTL, I will call this as DTA reversal. DTA reversal. Avladhaan vishayam. Appo DTA, DTL, origination, reversal. Easy. How? If the difference makes the taxable income more, impact is making more, makes the taxable income more, then it is DTA. Otherwise, if it is makes the taxable income less, it is DTL. Origination alone you remember, reversal abde ulta. Ivvaladhaan AS22 you should remember, nothing beyond this, my dear friends, all of you. AS20 la EPS calculation la, when you calculate basic EPS, my dear friends, you should, you know it is pays by variance. Adala okay, pays by variance. Very important part is the bonus element in rights issue. Bonus element in rights issue. In the problem area you consider. It is not the time to explain me, you work out these problems. Bonus element in rights issue. Adukapram the basic problem from diluted EPS. We know diluted EPS na, it is nothing but already considered some profit for basic EPS. Now debenture preference share to be converted into equity shares na, then there will be some savings in interest, net of tax, savings in preference dividend etc. divided by the weighted average number of equity shares plus prospective increase in weights, that is debenture converted into certain equity shares. So if debenture convertible into shares, number of shares will increase, interest will be saved. Other base money you find out what could be the EPS, which is what we call it as diluted EPS. Basic EPS what? Profit available to equity shareholders divided by weighted average number of equity shares. This is the basic concept. You work with this, my dear friends. So as far as lease problem is concerned, my dear friends, you need to work out because we don't have much time to explain that. So you have operating lease in the books of lessee, lessor, finance lease in the books of lessee, lessor. This is a very important area. Touch sale and lease back. You are selling one asset and again leasing it back. But at the time of sale, you get some profit or loss. And the profit or loss or a treatment how? That depends upon when you are again leasing it back, what type of lease is that? If the lease is finance lease means, then the profit or loss is deferred and amortized. If it is finance lease na, profit or loss is deferred and amortized over the lease period, So which means I have an asset worth rupees 3 lakhs sold for 5 lakhs. Again it is leased back upon the profit of 2 lakhs should be deferred and amortized if the lease is finance lease. But if it is operating lease na, then the treatment depends upon whether the sale is at fair value, sale is less than fair value, sale is greater than fair value. If it is sale is at fair value na, no problem, profit or loss, genuine profit na, it should be recognized immediately. Sale less than fair value na, generally it is profit or loss immediately da. But if there is some loss compensation happening na, class we discuss loss compensation happening na, then loss should be deferred and amortized. Sale greater than fair value means, then we told you there also immediately the general, but profit over and above fair value should be amortized அப்படினு ஒரு ஏரியா அதை மட்டும் மறக்காம செக் பண்ணிட்டு போங்க my dear friends. So with the limited time what we had, something that we have experienced around 270 to 300 hours, அதே ஒரு 2.5 ஹவர்ஸ்ல கம்ப்ரஸ் பண்ண ட்ரை பண்றோம், பண்ணினோம். சாப்டர்ஸை அது ஸ்பெசிஃபிக்காக கவர் பண்ண முடியாது. Solve problem from internal reconstruction, examination question, past to RTP, MTP, suggested answer question. If it is not found in 2, then go to third one, internal reconstruction problem, branch accounts problem from the latest resources. Last time we had financial statement of companies, balance sheet problem. So I'm not expecting a serious question from schedule 3 this time, maybe a cash flow statement problem, but these two are highly relevant. Consolidation problem with revaluation adjustment. So adallam vandu as a student I feel somehow like more significant, my dear friends. Idallam again purely based on past exam analysis da. You should not tell sir nambi pona I prepare only this abdin last minute you should not put the entire blame on me, my dear friends. So we have analyzed the paper for you and has given certain significance from that perspective alone, my dear friends. You are supposed to prepare in full. We are just putting an end to all the discussions now. Normally you know that I don't believe in giving some examination tips and all. Primarily I have practiced certain approaches that only I will do. Go to examination without any regrets. உன்னால முடியும்டா ஜெய்சா, நீ நல்லா படிச்சிருக்க, and based on all your preparation you will definitely pass. Some confident I will go. I need to create lot of confidence. Number one, whatever type of question come, instead of honestly worrying, oh this question I have not prepared 3 chapters na, my mind should not be working on in the question vanda what I will do, this question will come what I will do. Whatever question that comes I will attempt. The paper is for 118 marks. I told you 114 marks choice, then another internal choice of another 4 marks is there. Thereby we find that totally it is 118 marks. Suppose we are understanding, my dear friends, definitely we will not be considering that some question unknown also not a problem, number one. Number two, into the examination hall, I read the paper, and if I find the paper is sometimes tough or difficult, MCQs difficult, no giving hope and all. There could be like first 20 marks tough. I've seen students shattered and they are giving up and all. There could be 80 marks, such easy, where you could have easily scored 60 plus in 80. Then out of this another 5-10 marks or 5 to 7 marks, and it goes to 70 marks. Now when you shattered, then it will be ending up in 30-35 marks. Thereby, casual, first question difficult, poda. So like that approach only should be there. Some confident. So second question difficult, third question difficult, doesn't matter, my dear friends. You have to fight. Third, 100 marks attempt is very, very important. You should not come and tell after the exam. Tomorrow by 5 o'clock, you should not call me and tell, sir, paper was good, but I left 20 marks. I left 15 marks. You have to evaluate, assess yourself at the end of every hour, and 100 marks completion is always the mantra. That will always accumulate marks, my dear friends. So thereby, please write the 100 marks. All these things we would have told you, stress the importance of 100 marks in the exam. So you should do that. If you get some confusion about the facts of the question, proper assumption make, bold the right assumptions. This is how I interpret the question. I can accordingly provide the answer, my dear friends. Do not have shy of making assumptions. Assume and accordingly proceed, my dear friends. Provide lot of working notes in the examination, my dear friends. Do not get locked yourself in one problem or one situation, one adjustment. Leave it and go further. Even though that question was easy, etc., leave it. So you got somehow stuck with problem, leave it, ignore it, go to the problem. Don't have that ego and all. So completeness is very key. So have strong confidence, my dear friends, in your preparations. No regrets and all. No, it is not that everybody cleared only after covering 100% of syllabus. Nothing like that. 4 lakh started accountants, 99 exceptions will be always there. But exception doesn't make rule. So people have prepared 80%, 70%, that much only preparation, and that is how they would have cleared also. In an open forum, in a digital platform, just making such statement, that is a fact. It is nothing like all have cleared only by covering 100%. So no have regrets like guilt, etc. and all. Whatever you have done, that is sufficient. And with this limited resource, I will give my best shot. Like that, confident face the examination, my dear friends. So overall, this is the confidence, self-confidence, very important. Even on the confidence expectation, your 2 questions did not come. Sat or 2 questions, that question did not come. So adanal I am shocked. I am shocked. Some calmness should be maintained. Third, 100 marks attempt. Understood? So confidence, never give up under 100 marks attempt. Even if it is 75 marks tough, difficult, still fine. I will fight with the remaining 40 marks, 118 marks. So 40 I will fight. I will get, let me get 40 out of 40, 28. Then out of 75, let me beg for certain marks, 15, 16 marks, and I will let me get 45, 50. Never give up. If it is tough, paper will be easy. I'm telling you, expect for the worst also, then go, then you will be getting very good. So confidence, 100 marks attempt, never give up attitude. These are all immediate requirement that you have to build in these 2 days. Then practice these standards and all, my dear friends. Have these resources. Then stay calm. That's all. Okay, stay calm. Everything will come good, and everything will work for you. Pray to God. Seek your parents' blessing, and take. Make it. Just at least internally take wishes from your teachers, the elders, grandparents at your home. So go to examination, rock, my dear friends, and we'll meet in CA final. Keep in touch with the results, my dear friends. Thank you. All the best. and through the text I already given the number in the classroom. So if you have any doubts in between, you can text that through the WhatsApp, my dear friends. All the best, do well. Okay, yeah, do well, all the best.